My friends, today I need you to pause for just a moment and listen closely, because what I am about to share could truly change your daily life and your peace of mind. Imagine waking up on the 1st of October, opening your bank account, and seeing a higher payment than you expected. Imagine finally feeling that the government is beginning to recognize the struggles you have been facing: rising costs at the supermarket, soaring electricity bills, and the heavy burden of healthcare and medication. For many older Australians, the age pension is not just a payment, it is the lifeline that keeps the fridge stocked, the lights on, and the heart at ease. And this October 1, Centrelink is making big changes that could bring some much-needed relief. Now, I want you to stay with me until the end of this video, because I will walk you through each of the 5 big changes step by step and explain not only what is changing, but also why it matters for you and your family. These are not small adjustments, these are meaningful shifts that could help thousands of pensioners breathe a little easier. Before we dive in, I kindly ask you, if you haven't already, please subscribe to this channel. By subscribing, you ensure that you never miss an important update that could affect your money, your entitlements, and your future. This community is built on trust and care, and every subscriber is like a member of our extended family. So hit that subscribe button now, and let's go on this journey together. October is not just another page on the calendar. For pensioners, it often brings the beginning of new financial adjustments, new policies, and recalculations that can directly affect how much money lands in your account each fortnight. This October 1 is especially important because Centrelink has confirmed several changes that will take effect immediately at the start of the month. These are not promises for the distant future, they are real, concrete adjustments scheduled for this very date. Think of October as a reset point. For many, it means the chance to finally catch up with the rising costs that have been eating away at every dollar. Each change has been carefully structured to make life more manageable for older Australians who have worked hard all their lives and now deserve a measure of dignity and comfort. The very first change, and perhaps the one most people have been waiting for, is an increase in the base pension rate. That means the standard age pension payment you receive every fortnight is going up. It is not a bonus, it is not a one-off, it is a permanent adjustment to the amount that Centrelink deposits into your account. Why is this important? Because when the base rate goes up, every pensioner benefits, whether single or part of a couple. For singles, the increase may mean extra dollars that cover the cost of fresh fruit, vegetables, and medication. For couples, it may mean breathing room on the monthly energy bill or even a small cushion for emergencies. We all know that the cost of living has been running ahead of our incomes for too long. Groceries cost more than they did just a few months ago. Rents and utilities keep rising. This base pension increase is Centrelink's way of acknowledging those struggles and ensuring that older Australians do not fall behind. But friends, that is only the beginning. The first increase is like the foundation of a house. You need it, you rely on it, but what makes the house truly strong are the walls, the roof, and all the details that make life inside comfortable. And that brings us to the second big change, which focuses not on the base rate, but on the supplementary payments that so many seniors depend upon. Many seniors don't just rely on their regular age pension. Alongside it, there are supplementary payments that can make a real difference in your budget. These include things like the pension supplement and the energy supplement. From October 1, these supplementary payments are also being adjusted upwards. It may not sound like much when you hear just a few extra dollars, but when you add it up over weeks, months, and the entire year, it becomes a meaningful amount. More importantly, these supplements target the very areas where costs have been skyrocketing. The pension supplement is designed to give you extra help with everyday expenses: transport, bills, and essentials. The energy supplement, on the other hand, was created to help with rising electricity and gas costs. And with power bills being one of the greatest concerns for older Australians, this increase could not come at a better time. Supplements often go unnoticed because people think of them as extras, but in reality, they are the lifeline that helps pensioners survive in tough times. For example, imagine a single senior living in a rented unit. The age pension covers rent and groceries, but what happens when the power bill arrives with an unexpected increase? This is where supplements step in. They ensure that unexpected costs do not push you over the edge. By increasing these payments, Centrelink is recognizing that the pressure on seniors is not just in one area, it is across the board. Food, rent, transport, and utilities all matter, and supplements provide a cushion against that pressure. For couples, the supplements are shared, which means both partners benefit equally, creating a stronger sense of security in the household. Now, let us move on to the third change, which is very significant, especially for those who are close to the pension eligibility thresholds. From October 1, the asset and income test limits are being raised. What does this mean? It means that more Australians will qualify for a full or part-age pension, and some who are already on the pension may see their payment amount increase. For years, many older Australians have been caught in what I call the grey zone. They have worked hard all their lives, saved a little money, maybe own an old car or a modest home, and yet they were told their savings or income were just slightly too high to qualify for the full pension. That always felt unfair, because those savings were not luxuries, they were the product of decades of sacrifice. By lifting the thresholds, Centrelink is effectively widening the door. More people can walk through and receive the support they deserve. For those already inside, it means you can hold on to a little more of your savings or income without losing pension money. This is a change that rewards responsibility and acknowledges the real cost of living in today's Australia. To put this in plain words, if you had been worried that a small increase in your savings or a slight rise in your investments would cause your pension to shrink, you can now breathe a little easier. These new thresholds give you breathing space. They recognise that older Australians should not be punished for having saved money or for trying to remain financially independent. This change will especially help people who are semi-retired, those who may still do a little part-time work, or who have modest investments. Instead of being penalised, they will now be able to keep more of their pension. It is about fairness, dignity, and encouragement to remain active and secure in later life. So, friends, we have covered the first three changes: the increase in the base pension, the booster supplements, and the rise in asset and income thresholds. Each one is meaningful, but together they paint a powerful picture of relief. And yet, there is more to share. Because the fourth big change is about cost of living adjustments that are built directly into the system, ensuring that payments stay fair not just today, but tomorrow as well. One of the most important protections for pensioners is the cost of living adjustment, often called indexation. This means that your age pension is tied to inflation and wage growth, so that as prices rise in shops and bills climb higher, your pension should also increase. Starting this October 1, the adjustment that has been calculated is one of the strongest we have seen in recent years, reflecting just how difficult life has become for many Australians. This change is powerful because it is automatic. You don't have to apply for it, you don't have to fill out forms, and you don't have to prove anything. It simply happens. When the cost of bread, milk, vegetables, or electricity goes up, the system recognizes it and ensures that your pension is not left behind. For single pensioners, this could mean a bigger fortnightly amount than you expected. For couples, it means more stability in the household budget. Think about it. Every trip to the supermarket lately has been a reminder that money doesn't stretch as far as it used to. By tying your pension to cost of living increases, the government is acknowledging that reality. It is saying, "We see your struggle, and we are making sure you don't fall behind." This type of adjustment is especially important for seniors because most of you are living on fixed incomes. Unlike younger Australians who may pick up extra shifts at work, start a side business, or push for a raise, pensioners often don't have that option. When prices rise, there is no way to magically increase your income unless the pension itself rises. This October's increase is designed to protect you from being trapped in a cycle where your bills go up but your payments stay the same. It gives you breathing space and helps you plan ahead with confidence. Maybe it means you can buy a little more fresh food, keep the house warm without worrying, or even set aside a small amount for unexpected needs. Now let's move to the fifth big change, and for many pensioners, this one will feel like a blessing. Starting October 1, Commonwealth rent assistance is also being increased. This is especially critical for seniors who do not own their own homes and are renting, whether privately or through social housing. We all know that rent prices have been skyrocketing. In some cities, they've gone up faster than almost any other expense. Seniors on fixed incomes often find themselves spending far too much of their pension just to keep a roof overhead. Rent assistance is meant to ease that burden, and with this October increase, more support is finally coming your way. Imagine the relief of knowing that when the landlord raises the rent or when new utility charges appear, you have a little extra help. It may not cover everything, but it can be the difference between constant stress and a little peace of mind. For couples renting together, this increase is shared, and for singles struggling alone, it can make a very real difference in daily life. Rent is not optional. It's not like cutting back on luxuries. You can skip a restaurant meal or delay buying new clothes, but you cannot skip paying rent. That is why this change is so critical. It puts money directly where the need is most urgent. For those who have written to me saying, "My rent takes up half my pension," This increase is a response to your voice. It is recognition that seniors deserve to live with dignity, without the fear of being pushed out of their homes. Even a modest increase in rent assistance can free up money for food, medicines, or transport. It creates balance and reduces stress in households that are already doing their best to survive. So now we have laid out all 5 of the big changes coming this October 1, the increase in the base pension rate, the booster supplements, the higher thresholds, the strong cost of living adjustment, and the increase to rent assistance. Now that we know the 5 big changes taking effect on October 1, let's talk about the part that matters most. How much money will you actually receive? Because behind every policy announcement, every adjustment, and every press release, there's a simple question seniors want answered. How much extra will land in my account? For single pensioners, the increase in the base rate plus supplements and indexation means a noticeable bump in fortnightly payments. While the exact amount will vary depending on your individual circumstances, the rise is not symbolic, it's practical. Imagine opening your Centrelink statement and seeing an extra $20, $30, or even more each fortnight. That's not spare change. Over the course of a year, it can add up to several $100s. For couples, the combined effect can be even more powerful. 2 people living under one roof often share expenses like rent, bills, and groceries. When both partners see an increase, the household budget feels a little lighter. Together, these changes could free up enough for a modest outing, healthier food choices, or even the comfort of knowing that unexpected bills won't throw everything off balance. If you are renting, the October changes will mean even more. The boost to Commonwealth rent assistance is designed to ease the most crushing burden seniors face today. For someone paying rent on a modest flat, the new payment could mean your pension stretches just a bit further, so you're not forced to choose between rent and groceries. Let's paint a picture. Imagine your fortnightly rent is $500. Before, the rent assistance may have only covered a small portion, leaving you to struggle with the rest. With the increase, Centrelink steps in with a little more support. While it won't cover everything, it can shave enough off that bill to let you breathe again. And when combined with the base pension rise and supplement increases, the impact is more than the sum of its parts. Take Margaret, a 72-year-old widow living alone in a rented unit in Melbourne. She's been on the age pension for several years, and her budget has always been tight. Each fortnight she juggles rent, groceries, electricity, and medication. By October 1, Margaret's pension rises thanks to the base rate increase. Her supplements rise as well, giving her a few more dollars for bills. And because she's a renter, her rent assistance also increases. Altogether, she finds herself with around $40 extra each fortnight. Now, $40 might not sound like much to someone still working full-time, but to Margaret, it's everything. That $40 could mean buying healthier food, filling her prescriptions without delay, or even setting a little aside for Christmas with her grandchildren. It is not just money, it is peace of mind. Now let's look at John and Helen, a couple in their late 70s who own their home but still struggle with bills. Their pension increases as a couple, their supplements grow, and the cost of living adjustment ensures they don't fall behind. For them, the increase could mean a combined extra $50 or $60 a fortnight. Again, not life-changing in the sense of luxury, but deeply life-improving when every dollar counts. Sometimes people outside this community say, it's just a few dollars. But for seniors living on a fixed income, those few dollars are the difference between constant stress and a measure of comfort. They mean turning the heater on during a cold night without guilt. They mean buying fresh produce instead of only cheaper, processed food. They mean paying for a taxi to a medical appointment instead of struggling with unreliable buses. That is why these October changes matter so much. They are not just about numbers on a government spreadsheet. They are about dignity, independence, and the ability to live without fear that the next bill will break you. The good news is that most of these changes will happen automatically. You don't have to submit a brand new application, and you don't need to chase Centrelink for every dollar. The system is designed to update your payment based on the new rules. So when October 1 arrives, your next pension payment should already reflect the higher amounts. But here's what you should do. Check that all your details with Centrelink are up to date. If your bank account, address, or contact information has changed, make sure Centrelink knows. If your income or assets have shifted, perhaps you sold a car, closed an investment, or even received a small inheritance, update those details too. Why? Because the new income and asset thresholds may work in your favor, and you want Centrelink to calculate your payments correctly. Take a moment to review your MyGov account or check your Centrelink letters carefully. They will usually outline the exact new amount you're entitled to. If something doesn't look right, call or visit Centrelink as soon as possible to make sure there are no mistakes. Many people are asking, will everyone get the same increase? The answer is no. It depends on your situation, whether you are single or partnered, renting or owning, and what income or assets you have. But everyone on the age pension will see some increase from October 1. Others ask, will this be a one-time payment or permanent? These are permanent adjustments. They are not a stimulus or a short-term bonus. That means once your pension goes up, it stays at the higher level going forward. And some ask, what about people who just miss out on the age pension? Well, that's why the raised income and asset thresholds are so important. They bring more people into the pension system and ensure that those on the borderline are no longer excluded unfairly. I know that for many of you watching, money is a constant worry. You may lie awake at night wondering how to pay the rent, how to cover groceries, or whether you can afford the medication you need. These increases will not solve every problem, but they will give you a little more room to breathe. They are a recognition of your struggle and a reminder that your voice has been heard. You worked hard all your life. You built families, communities, and this country itself. Now, in your later years, you deserve security, dignity, and respect. These October changes are a step in that direction. October 1 is just the beginning. The system of indexation means that further adjustments will come in the future, keeping your payments aligned with the rising cost of living. And as governments respond to the pressures seniors face, more reforms may come. Staying informed is your greatest tool. That is why this channel exists, to bring you the latest updates in simple, caring language. We break down the news so you don't have to fight through complicated reports or confusing numbers. You get the facts, the meaning, and the guidance all in one place. So my friends, as October 1 approaches, take heart. There are 5 big changes coming. Your base pension rate is rising. Your supplements are increasing. Income and asset thresholds are being lifted. Cost of living adjustments are locked in, and rent assistance is going up. Each of these changes is important, but together, they form a powerful shield against the challenges of today's economy. They mean more money in your account, more security in your home, and more dignity in your daily life. I encourage you to share this video with other pensioners, friends, or family members who may not know these changes are coming. The more people who understand what's happening, the more peace of mind we can spread across our community. And before you go, if you found this information helpful, please subscribe to this channel. By subscribing, you become part of a community that cares deeply about seniors, pensions, and financial security. You will never miss an update that could affect your money and your future. Thank you for spending this time with me today. Remember, you are not alone in this journey. We are in this together, as one family, supporting each other through every change.